Hey guys, and welcome back to another video. Today we're going to be talking about Netflix stock. So recently, last week you might have seen, Netflix jumped last Friday all the way from 84 up to 96, which I believe was a 13.5% increase. Now, if you've been keeping up with Netflix, you would have noticed Netflix has not been doing so well recently, coming down from a high in June and just continuing to go down until this rise. So this rise can be attributed to the fact that Netflix had a bid out for Warner Brothers Discovery to buy them out. So they were in a bidding war with Paramount. Essentially, each of them was increasing the bid, attempting to get WBD. But last Thursday, Netflix announced that they would not be raising their offer and that they would actually let Paramount make the deal. So this is important because Paramount now has to pay $31 a share for all the WBD investors, and they also have to pay Netflix a 2.8 termination fee, 2.8 billion. So that means not only did Netflix get out without paying anything, but they also got 2.8 billion just for having the deal be terminated. So part of the reason for this big Netflix boom is that by having this termination, Netflix no longer has to pay all this money for WBD, which most investors actually didn't even like the idea. Plus, they don't have to take on the debt that Warner Brothers Discovery had. So by getting rid of taking their deal away, they no longer have to pay this debt, and they no longer have to purchase the company that many investors don't like. Going on to C, you can see that ever since December, when they started this takeover offer, the stock has just dropped. And this is because the investors are looking for more organic growth. They don't want Netflix to be buying a company that's doing pretty bad and obviously has to sell. They want them to focus on Netflix's actual growth, being the monthly subscribers and all their other forms of revenue. Now, looking at some other data, we can see that the average analyst target for Netflix is actually around $113. This might be a little inflated because it is from the prior to most of the deals, but as analysts are now updating their price estimates due to the new deal, we could see that some have moved their price ratings back up. So we can see Netflix going anywhere from a range of around probably 95 to 130 on most analysts. But based on this, with the continued green, and if more investors start to buy back into Netflix, it probably has a good shot of recovering and growing more over time. That's about it for this, and I'll see you guys later.